Isn't it fascinating how most content on YouTube around crypto is the same? It's all just promoting cryptocurrencies, trying to push up the price, trying to bring new people into buying a token. And very often that's just because of conflict of interest. Either the influencer got paid by the project or the influencer is holding tokens in the project. Now, I never accept any money from any crypto project, and I'm completely agnostic to the price movements. If it goes up or down, I don't care, because I bet on both directions. If I'm bullish on something, I'm betting on rising prices. If I'm not so bullish, I'm betting on falling prices. So really, for me, it doesn't care whether or not something is going up or down. And this can confuse some people. Because here's the truth, most people that search for Pudgy penguins on this channel, they are likely investors in the token. And in the early days, I was quite bullish on the token, and that gave a lot of positive feedback. Many likes on many of those videos, but recently I turned rather bearish. And so just have a look at the like to dislike ratio. It tended to go down over time. It tended to worsen. Because here's the problem. There's really no incentive as a YouTuber to talk bad about a project. Most people just want to get their bias confirmed. Most people just want to see that whatever they've bought is the right thing. Very few people want to see an objective view. Very few people want to see when it's potentially time to sell an asset after a nice rally. Because have a look at this video over here. It was published on the 7th of August. Why Pudgy penguins will fall 50%. At the time, we were at 3.5 cents. And while we are still not at 1.75 cents, we definitely went down so far. And at the time, I was also sharing that I was betting on falling prices of Pudgy penguins. And since then, that trade is already 58K in profit. Here, don't just take my word for it. Here is the trade on Hyperliquid. Here is where I shared this in premium on the 7th of August, how I'm betting on falling prices. And this is what happened since then. I'm still short Pudgy penguins. I'm still betting on falling prices. This is Pengu relative to Solana. And here's the same relative to all of the altcoins, so relative to the others market cap. We aren't necessarily that low, we aren't necessarily high, we simply just continue bleeding quite consistently. The rate of the decline is roughly 22-23% per month. Now, why did I bet that much money on a falling price of Pudgy penguins? The reason is that there are attention shifts within the Memecoin space. So there's a strong correlation between attention and price. As more people learn about a particular cryptocurrency, more people tend to buy as well. But there's always some kind of saturation point. There's always an inflection point where so many people learned about the token that then it's very hard to grow the investor base further. And once we reach that point, we tend to see profit taking. We tend to see how the momentum turns around. The art in this is to try to find out where that saturation point is. We see those pump and dumps all the time, but where are we actually peaking? And I think market cap comparisons are a very useful tool here. So Pudgy penguins is still the largest meme coin on Solana, and that's why I'm still short the Pengu token. It's now 1.8 billion in market cap. And have a look at other pump and dumps on Solana. So this is the Bonk token. It peaked out at a market cap of 4 billion. It's now trending down. Here we've got Dog with Head that also peaked out at around 4 billion. But then we've got also many meme coins on Solana that peaked out earlier. So here is Fartcoin at around 2 billion. Here is Popcat around 2 billion. Here is Peanut the Squirrel, a bit under 2 billion. And here's then Pudgy penguins, right? It's not at 4 billion. It peaked so far at 2.7 billion. But still, it gives an idea where the air might be getting thin. Meme coin trading is a player versus player game. The vast majority of people lose money, a few people win money, but it's all about risk versus reward. Does it make sense to buy a risky investment that can go down massively if we don't have the multiple X returns potentially? And if you're already above 2 billion, it's very unlikely that we're going to see the 6 or the 10 billion if most other meme coins turned around at the $2 to $4 billion mark. There's no value creation in meme coins. It's all about the tops and the bottoms better than the average investor. It's 100% player versus player, and obviously there is some luck involved, but I don't think that cryptocurrency investing or speculation is only luck. I think it's both luck and skill. And so I've been sharing those charts in prior videos. The number of investors, the number of holders on the Solana chain of Pudgy penguins isn't growing anymore. And when the investor base isn't growing, it's of course hard for the price to long-term appreciate, especially versus Solana, the blockchain where Pudgy penguins is housed. On the left side, we see the number of wallets with at least 35,000 Pengu tokens. So that's $1,000 worth of the token. In the middle, that's a 10x, so that's $10,000. On the right, another 10x, so that's $100,000. We can see how all wallet cohorts, small retail, but also the whales, they tend to rather go down in numbers. The trading activity itself is also going down. So on the right side, we see the number of token transactions, and on the left side, we see the number of first-time traders versus recurring traders. So really, the demand dynamics aren't that great for Pudgy penguins. And the future price development is dependent on demand, but also on supply. And Pudgy penguins is one of those very few meme coins that actually have an expanding supply. And the more supply there is, while the demand isn't growing, the more the price has to come down. Here is the tokenomics. And officially, no Pengu tokens have unlocked so far. But it's unclear whether or not there have been OTC or over-the-counter deals. Maybe the team has sold some tokens at a discount for their unlock to now get the allocation and to now cash in. Very often, that selling pressure then gets hedged via the perpetual futures. And so because of that, we tend to every now and then see negative funding rates. So that's when there's more shorts than longs. The shorts have to pay the longs in order to bet on falling prices. Most tokens have a positive funding rate most of the time. But if there's a development like this, where we do have spikes of negative funding rates, that's when the market in aggregate is very, very bearish. At least the perpetual futures market. And this is where really the price discovery for Pudgy penguins happens. This is where most trading volume for Pengu happens. Here, have a look at this. On the spot market, there was only 34 million worth of trading volume on Binance, but on the perpetual futures market, there was 164 million of trading volume. So really the price discovery happens on the perpetual futures and not on the spot market. Why does that matter? It matters because perpetual futures are used for short-term trading. It's short-term capital that levers up a price and then afterwards deflates the price again. Long-term spot holding, that's the diamond hands, right? Nobody that wants to hold a token for the very long term is using the perpetual futures because of the high financing costs. Perpetual futures are only useful for getting in and out of a token quickly because of the small slippage. So the transaction costs are low for the perpetual futures, but holding a token over the long term is very expensive. And so here is why I'm still bearish on Pengu. There is still declining open interest. So the amount of bets on the Pengu price tend to go down. And there is a lot of correlation between the spot price, that's in yellow, and the open interest, the amount of bets on the price. When there's more bets on the price, the spot goes up. When there's less interest in the token, the spot price tends to go down. And we are still very far away from those prior lows in terms of open interest. There's still more liquidations going to happen. And of course, most of those liquidations now happen on the long side because the price tends to decline. Trading volume continues to go down. And if we are back at the levels of March of this year or of June of this year, that's when I'm going to close my Pengu short. Of course, looking at the relative valuation to Solana also cannot hurt. There's likely going to be somewhere a support around the levels where Pengu in the past bounced as well. But there's still some way to further fall until we hit those supports. So here's an 18% underperformance, or this over here is a 33% underperformance versus Solana. Now, personally, I'm a friend of not just trying to ride the waves, not just trying to find the next altcoin that does a 10 or 100x. I'm a fan of trying to find strategies that perform independent of the market environment. Now, I want to share the latest results of the relative valuation trade strategy. So that's the community capital pool. This is where I trade for the premium members of this channel. It started 2 months ago, and annualized we are now at 72%. Now, besides just this positive performance where we go long Bitcoin, Ethereum and Solana, and we go short many other inflating altcoins, I'm especially proud about this because Bitcoin plus Ethereum plus Solana just went sideways during the same time period. So this is the performance while the market did nothing. And this, I believe, is where the real key for money making lies. It's not trying to ride the hype cycles or the attention waves. It's more about finding structural inefficiencies in a market and then set up strategies that take advantage of those inefficiencies. I've used this relative valuation trade approach already for quite a while, roughly 4 years. So yes, the community pool trading only started 2 months ago, but because I did the relative valuation trades with my own account, I outperformed just dollar cost averaging Bitcoin by quite a bit. So had I just dollar cost average into BTC, I would have gotten the performance here in this gray line, but instead I got the performance here in black. And so really the question is, if you still want to find the next 10x altcoin and then lose all funds in the process, or if it's maybe better to follow a strategy that tends to make money long term, independent of market conditions. This is what I'm trying to achieve here. Because let's think about this fundamentally. Why was Bitcoin invented in the first place? It was invented because of the money printer, right? Because fiat currency expands over time. There was the bank bailout where the banks got all of this capital injection at the expense of the average person. The purchasing power of US dollars went down. And most people underestimate how quickly the purchasing power is going down. This is USM2, it's the US money supply, and this grew in the last 66 years by 6.8% every single year. So compounded geometric average. This is the linear scale. On a logarithmic scale, this looks pretty much like a straight line. So it's 6.8%. It's that growth why Bitcoin exists. Because it's extremely hard to increase your income every single year by 6.8%. There are a few people that benefit from the system, from devaluation of the currency. It's a massive hidden tax that concentrates capital further and further in the hands of a few. And so the global financial crisis is why Bitcoin was born, right? This is the S&P 500 that crashed by more than 50% in a very brief period. And the very first block, the Genesis block, had a reference to a New York Times article. Chancellor on brink of second bailout for banks. So that was the bank bailout in Germany. And so the idea of Bitcoin was always to be the hardest of the monies, right? A peer-to-peer system, completely independent of the evil banks. At the beginning, the inflation of Bitcoin was very high as well, but it was high just in order to attract adoption, which in the end, of course, was very successful. But now it's not high anymore, right? It's only at 0.8% per annum, and more Bitcoin every year gets lost than gets mined. So actually, Bitcoin is now a net shrinking asset in terms of circulating supply. It becomes more and more rare. Now, why am I talking about all of this? I'm talking about this because Bitcoin's intention was to be hard money. Bitcoin's intention was to escape the inflation. Now, for most altcoins, it's the exact opposite way. The token inflation of most altcoins is even worse than fiat currency. And that's why even versus fiat currency, most altcoins go down. But they especially go down versus Bitcoin long term. Here are a few random examples that I just took from this website, Tokenomics.ai. This is IOTA. It started at a token supply of 2.7 billion and is now at 3.6 billion. And here's IOTA relative to Bitcoin over time. Next example, here we've got Axie Infinity. Again, I just took something random from this website. I did not handpick those charts. Here's Axie Infinity. It started at 60 million and it's now at 266 million. This is much worse than how quickly fiat currency inflates. And here is Axie Infinity relative to Bitcoin. I'm not going through every single number now, just showing the general trend. This is Aptos, and here is the Aptos relative to Bitcoin chart. Here is Arbitrum, and here is ARB relative to Bitcoin. Here we've got ApeCoin, and here is Ape relative to Bitcoin. And again, those are not hand-picked examples. Most altcoins look exactly this way. And it's all because of token inflation. Whatever goes up constantly in supply, when the demand cannot catch up, tends to just go down in value. It's just the law of demand versus supply. This is how prices get discovered. It's economics 101. And so I'm taking advantage of this structural inefficiency in the crypto market. That's why I'm able to outperform Bitcoin. I'm not buying those assets. I am betting on falling prices of those assets, especially relative to Bitcoin, not just in US dollars. The strategy doesn't work. This is, by the way, the performance of the smaller altcoins in the last year. In the last year, Bitcoin doubled in price roughly. So there's only 3 out of 100 altcoins that did better than Bitcoin. 97 did worse. And this is no coincidence. And so we are constantly making money with this strategy. We are shorting various altcoins with high token inflation. Here are a few trades shared by the community members. I'm of course sharing my trades as well. You can simply just copy trade me. But the reason why most people never attempt to do this approach, to bet on falling prices of bad altcoins while simultaneously betting on rising prices of Bitcoin, Ethereum and Solana, the reason why most people don't do this is because they don't know how to set this up, or they are scared of the potential risk. Because everybody says that betting on falling prices is so risky. But it's only risky if you don't know what you're doing. And so that's why I created dedicated tutorials on this. And it's actually not that complicated. You just have to watch 2 videos. It's this one over here, using perpetual futures, and it's this one over here, risk management with relative valuation bets. It's in total 1 hour of content. And after you've watched this and you've joined the community, I will share my favorite trade with you. My favorite trade is structured in the same manner. So we bet on rising prices of Bitcoin, Ethereum and Solana, and we bet on falling prices of one particularly bad altcoin that continues to underperform extremely consistently. I'm so confident in that trade that this trade will make money in the next month, that in case when you open that trade that I will share with you once you join, in case you don't make money with that trade after 1 month, so during the membership period, if that trade is not in the green, then I will simply refund the membership fee for you. You either make money with the trade or you get your money back. It's that simple. And so here is that fee. It's $125 per month. And again, if you don't make money with the first trade that I will share with you, you will get those $125 back. If you want to be part of the copy trading vault, so where you automatically get the execution of my trades, you don't have to manually copy trade. I still share every single trade I do. But if you don't want to manually execute all the trades yourself, you can become part of the copy trading system as well. Not right now, unfortunately. All deposits have already been closed until end of the year, but there will be a new copy trading pool at the beginning of next year, January of 2026. Access to that copy trading pool will be restricted to the annual members. So if you want to already sign up for that, you can do so. Everybody that signs up for the annual membership will get access to the copy trading vault, but you can simply start out with monthly and then switch to yearly later down the road. That's totally viable as well. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.